Good morning, everyone. Welcome to our morning market update for Wednesday, March the 15th. This is George Papazov, owner, founder here and head trader at Trade Pro Academy. I'm wearing a hoodie today. You're going to notice just because I said, why not? I used to wear a suit for work when I worked my 9-to-5 job. I was in sales. I was in banking as well as a trader on the floor at one of the bigger banks in Canada here. And I said, you know what? I'm tired of the suit. Let me ditch the suit. So I put them all in one pile and I burned them all. And I made marshmallows in the smokestack. Just kidding, that didn't happen, but they're neatly packed in the closet. They won't even fit by the time I need them. My body's changing too. All right, in a good way. Welcome to our morning update. Started off on a sidetrack already. We got a huge day today. It's going to be huge. And the big part about it is Federal Reserve Day. Today, there's going to be an interest rate announcement, whether or not it's going to go up. We're going to talk about that in a brief moment. There's a whole bunch of stuff we're going to discuss. What it's going to mean, what you have to watch for, how to trade it. And then I'm going to let you guys go and off to the races we go to make some money here in today's markets. I think we're going to have exciting action. I think there's going to be a lot of opportunity for the trader who's there to capitalize on it. Let me do the morning roundup. First of all, in Asia, markets are down in Japan 0.2%, Hong Kong down 0.2%, China up 0.1%, India down 0.2%. You could call that flat, F-L-A-T. In Europe, same deal. London's up slightly. Paris and Frankfurt absolutely flat. Futures at in the morning, Dow is up 0.2%, S&P is up 0.2%, NASDAQ up 0.2%. Crude, the big winner, 1.7%. And we're going to actually start our stock or our morning forecast update talking about crude. And then we're going to transition off into Janet Yellen. And then we're going to end it there. All right, gold down 0.1% to 1,200 even at 6:20 in the morning. So a little bit in the past. Let's see how the futures are doing right now. I could see S&P 500 up to 67.75, the point of control of yesterday. Yesterday's session, when we were getting slammed by sellers, I was out there saying we're going to get those 67.75s. Watch out for them. We didn't get them in the U.S. session. There they are. It happened in electronic trading as of, what time did it happen? Just go in here and have a look. As of 4:36 in the morning, we hit that high and went above. Yesterday, we saw a lot of relentless selling. The sellers really came out for the first time in quite some time, didn't they? They came in, and every time the bulls would peek their head above the waterline, the sellers would push them back down and try to drown them. Well, it all worked well until we hit the low overnight. Those 2360s are the level I'm telling you about. Watch out below 2360. So far, all we managed to do is get the sellers stuck below 2360, get them short, and then rinse them back up to run their buy stops. And we've tried that twice now. On the third and fourth go, we might crack that low. The ice is getting thin. It's cracking for sure, but the markets are recovering. They're resilient. We're in an upswing, and shorting these things is just fighting the trend. Just find a good location to get long and just click the button and get long. Don't fight it, all right? Watch those 2360s. I don't think we go back and touch them again. I think we're just up and away from here. Today's economic calendar, we got Empire State Manufacturing Survey that's already out. At 10:30, we have the DOE, the Department of Energy, petroleum inventories, so crude oil inventories. We'll talk about that in a moment. 10:30, that's going to be a big trade. If you're an oil trader, or even if you're not an oil trader, if you're a trader at all, you got to be watching the stuff. There's going to be an opportunity to make your full day off of this inventories number. We're going to trade that in our group. FOMC, we have the interest rate announcement and forecast coming out at 2 p.m. and at 2:30, Janet Yellen hits the Q&A. So she hits the press conference to answer some questions. I'll tell you what to look for in that in 1 minute. All right, here's the deal with oil. The IEA yesterday cautioned that the supply didn't decrease, but demand has decreased. So the IEA is saying in 2017, we expect demand for oil to decrease, all right, from 1.6 to 1.4 million barrels a day. And Saudi Arabia came in, and there was a report that they actually overproduced. Their production numbers weren't in line with what they had agreed. And then the energy minister Novak came out and said, you know what, guys, that's just domestic production. It didn't go into any international market. So that supply didn't hit into international markets, and the market popped like crazy in oil. If you don't have a news wire, or if you don't have anything to deliver that news to you, all right, Twitter is not good enough. It's delayed. It's good if you're kind of just dilly-dallying in the market, but if you're going to do it seriously and make money, Twitter is not the feed that you need to supply you that info, because as soon as I heard the squawk, there was an opportunity to get long the oil trade, and it really ran about 30 to 40 cents. But that's where a good news feed comes into hand. We use Trade the News. If you actually email us, email me info@tradeproacademy.com. If you want a news wire, I could set you up on a special deal that you won't get anywhere else. because we are an authorized reseller and we're in collaboration partnership with Trade the News. Phenomenal service, really good rates, and it'll keep you up to speed while you trade. Just wanted to put that in there just because I think it's that important. If you're going to trade crude, you need news. If you're going to trade ES futures mainly, you don't need it as much, but it's still very important. Here's the API oil inventories. Yesterday at 4:30 p.m. Eastern time in the afternoon, 30 minutes after the bell, API inventories came out. Gasoline down 3.9 million versus minus 0.5 prior. All right, distillates down 4.1 minus 2.9 prior. And Cushing inventory was up slightly versus an expectation for it to be up a little bit less than that. So overall, it was a net draw. It was the first draw in 3 weeks. A draw means there's more demand or less supply. In this case, it was less supply on the supply side. All right, so that was really good for the market. If there's less supply of something, if there's less of something going around and the same amount of people wanting to buy it, it makes sense. It's worth more, right? Basic economics. That's crude oil inventories. Watch out for the Department of Energy today, 10:30 in the morning. Will they confirm that same draw? If they do, look out above on oil. I really think oil is a situation where we got a lot of people stuck short. And I think a lot of longs have unwound their trade. Now we just go and plow back ahead and see where we could test some resistance and roll over and come back down. That's the trade of crude at the moment. I would not be selling it. I think that trade is done. I think the sell-off is done. I think now it's so much easier to get the algos to ramp up the price and eat your sell or buy stops as a seller than it is to try to sell it into a rally. All right, that's my forecast for it. Here's the road to Janet Yellen and the rate hike. Today at 2 o'clock, there's probably about 100% chance, more like 93, that there is going to be a rate hike by 0.25 basis points or quarter point. And that's, at the beginning of the end of last year and the beginning of this year, the language and the expectation was that we're going to have a June, September, and December hike. So we're going to have 3 hikes across the latter half of the year. They meet quarterly, right? And then really, I want to just give you this update. Here's the track to how this happened to be 100%. I'm going to go over this very quickly. On Feb 14th, Janet Yellen testified before the Senate Banking Committee, all right, and she said that waiting too long to tighten rates would be unwise, earmarks, and that the Federal Open Market Committee would evaluate progress at upcoming meetings, noting that further adjustment was likely if the economy stayed on track. Well, all right, so she's basically said, look, we can't keep rates too low for too long. We got to start hiking. That was imputed in February 14th. On the 15th of February, Dudley and Yellen both speak, and CPI increases. CPI is an inflation measure. All right, so now you're starting to think, okay, we're starting to get what they're looking for. On February 22nd, February minutes released, they were fairly neutral. They had a neutral tone. On the 28th, Kaplan, Harker, Williams, and Dudley, that was a massive Fed day. They all talked, and they pumped up the thought of an increase. All right, they just said, you know what, same thing that Janet Yellen said. They reverberated that. March 1st, Lael Brainerd, she's typically a dovish FOMC voter. She's very dovish, which means she believes in lower interest rates, more accommodative policy, and the likes. She flipped on March 1st, and she said, you know what, guys, I think it makes sense to start increasing rates. March 3rd, Janet Yellen seals the deal with her speech and says, unless things change, we're going to have a hike. A hike is coming this afternoon. That's not the big news. The big news is not hike or not, okay? It's going to come out, and they're going to say Federal Open Market Committee increases rates by 2% or by 0.25%, 0.25%. If it goes up 2%, that's a massive shock, by the way. Short the market. And the real big news here is it's threefold, really and truly, all right? First of all, watch the tone of the language in the statement. At 2 p.m., there's going to be release. You're going to look at the tone. How do you know what the tone is? Review last time's statement. Review the last quarter statement, print it out, look at exactly what was said, and scan the new statement and see if there are any changes. What the market is now looking for is how many rate hikes will there be in 2017. Currently, we have 3 implied in the market price action. How do I know that? Because I follow this stuff. Okay, we have 3 interest rate hikes that are slated to be done this year. One in March, maybe in June, maybe in September, and one maybe in December. With this hawkish tone, the Fed is now hawkish, meaning a hawk goes up, right? So they're expecting interest rates to increase. With this new hawkish tone, watch out, because they might say there's going to be 4. We're going to do March, and if the economy continues at this current pace to improve, we're going to do 3 more. That means we're going to do an interest rate hike every single meeting. And some meetings, they could do more than a quarter point. They could do a 0.5 percentage increase. Okay, so the tone is set for 3. Today's going to be one of the 3. Look out for what they say. The other thing you have to watch is the dot plot. when these FOMC members sit down to vote, they actually put dots as to where they think interest rates are going to go over the next 1 year, and then longer term projections as well. Find out and look at the dot plot it's released. Find out what that looks like and how it shifted. If rates have shifted up, you're seeing a hawkish stance. If you see dots higher than the previous dots, obviously that's hawkish. They're expecting rates to increase. The market may or may not be pricing that in. So that's where the opportunity is going to come for the trade. It's not the rate hike. The rate hike is a foregone conclusion. It's only a tradable opportunity if there is no rate hike. Then it becomes interesting. All right. That's sort of what you want to see, or what you're looking for in this FOMC meeting. At 2:30 is a press conference, and I'll tell you how to trade it in a second. At 2:30, it's a press conference, and Janet Yellen's going to be taking Q&A. She does not slip. That lady is phenomenal at doing press conferences. She will talk for 4 hours and tell you absolutely nothing. It's amazing. I can't even do that. I got the gift of gab. All right. So yes, she's going to talk. Distracted myself. She's going to talk and she's going to answer questions at 2:30. Listen to that question and answer period. Very important. If she makes any indication whatsoever, there's going to be more hikes. It's going to be more steep, the rate of increase. So more hikes, bigger hikes at each meeting. All right, more hawkish stance. And if she says, we're waiting for this to happen, then that becomes an extreme focus. All right, remember, she said she expected stronger jobs. She expected stronger inflation, and that would give them more confidence to raise rates. Guess what? They got stronger jobs or stronger inflation on the CPI. And on February, last Friday, we found out we got a really good surge in private employment out of February's report. So she's got it. Check and check. It's a done deal. Look to see what kind of tone she sets. I think that's the important part. How do you trade this thing? With like anything else, I can't give you a step-by-step plan. There isn't a step-by-step plan on the definitive guide how to trade the Fed. Because if that existed, nobody would make money because everyone would be doing it and no one would be able to get in and get out with a profit, right? So unfortunately, you got to be trained to know what to look for. And we teach you all of that in our futures course. I go into a lot of details, how to spot order flow, where to find stuck traders, where to know when it's an exhaustive move, when to know when to short into a rally, when to buy a rally, when to do a breakout, when to fade. All this thing requires surgical precision in today's market. Okay, so I can't give you checklists if this happens and do this. It's not a logical type of approach. It's more an emotional approach. You got to be an emotional reader on the charts. So, but here's what I can tell you. When the Fed announces their press statement, get out of the way. At 2 p.m., the last thing you want to do is be trading at 158, trying to predict, number one, what's going to happen, and number two, what is that going to mean for the market? Get out of the way. It's a steamroller. You don't have the capital, nor do you have the execution speed to be going up against high-frequency traders. I don't know. Maybe you do. If you have a high-frequency trading shop and you're listening to this, phenomenal. Retweet it. I'd love to share it with your team. But if you don't have the infrastructure, computer technology, get out of the way. All these algos do is read the headline and trade against each other. Let that volatility go. Stand on the sideline and watch. And here's what usually happens on the Fed, and I'll leave you with this. When you're trading the Federal Reserve announcement, usually the typical day in the way it unfolds is you get a pop or a drop. The initial move is your direction. That's your cue. You get a pop, everyone starts to jump on board. The trade becomes crowded. When everyone that's intending to buy has already bought, what do they become? They become sellers. All right? A long is a seller to get out. Those sellers start to get out. You get the pop, the drop on the retrace. You find some support. You got to watch order flow very carefully. Find a buying balance, get behind it, set a tight stop, let it go. All right? That's the trade plan. Do not trade at 2 p.m. Do not trade the initial burst. That's death waiting to happen to your trading account. All right? If you just do that, sit on the sidelines and follow for the rest of the day, you're going to do amazing. Watch out. So 2 p.m. is the announcement. 2:30 p.m. we have the press conference. Over and out. We got to get to our trading room here with our subscribers. Got to set up the day, set some levels, and trade the open together. If you guys want to join, I encourage you. You have a 14-day trial period. Come out and give it a shot. TradeProAcademy.com/earn-package or /free trial, or you just go to TradeProAcademy.com. We also have a really nice webinar coming up next Tuesday, the 21st. And what that's going to be is essentially it's going to be I'm going to be announcing a price increase and a service increase as well. We're going to increase the value of our product, but that's going to come with a price increase of our packages as well. We're going to rebundle things a little different. It's going to be a change. If you have a chance right now before the end of March to actually lock in the existing rate there's going to be about a 60% discount if you go in and just do it now. So I mean, check it out. Join in. I'll make the announcements on the webinar. Go to tradeproacademy.com and register. You guys have a wonderful afternoon and evening. If you love this broadcast, if you like it, if you like what we do, please click the like button, subscribe to us, and share it with your community. Share it on Facebook, wherever you can. We appreciate you helping us get the word out. The more that we get, the better that we'll do, and we'll build out this community. You guys have a phenomenal day. Good luck trading. And remember, in the morning, keep the leash tight. In the afternoon is where your trading opportunity will be. The last thing you want to do is go out and blow out your stop in the morning session and not be able to trade in the afternoon, because that's where volatility is. Okay, we might have a quiet start, but it's going to end in a very volatile stop. We're going to go out with a bang. Take care. Have a great day. Subscribers, give me 2 minutes less. I'm just going to switch off the broadcast, and we'll do some level review, some triggers, next best trades, and get into our analysis. All right, take care, guys. Goodbye, YouTube.